Welcome to Fed Watching for this last week in November. And the markets were wild, the economists were talking, and we got a chess world champion. Let's jump into the market recap. Welcome back. It's Monday, November 26th, and we get a little bounce coming out of Thanksgiving. Hopefully, everyone had a good Thanksgiving. Hopefully, this makes it a little better. Up a percent and a half, 2%, pretty much across the board. Really, really nice day. No real reason for it, just like there wasn't much of a reason for most of the moves last week. We will get some pretty interesting numbers coming out this week. We get a GDP number. We get a whole bunch of speeches from FOMC members at the Fed, hear what they're thinking, see if they're still thinking we're going to get a rate increase at the end of the year, or if it's more likely that they're going to hold off on that. It's Tuesday, and a day that started pretty significantly down ended up either up or only down a little bit. And I usually tell you there's no reason for the market moves, but today we actually had what I think is a reason, pretty clear one. There was a speech out of the Fed we had coming out from Richard Clarida, who's a voter on the FOMC, and he was pretty dovish. He said it's not clear that we need a lot more rate hikes, basically. He came out and said he thinks we're pretty close to the neutral rate, which is the rate where the Fed probably would not raise rates. And I'd say it's getting less and less likely, even though it still seems maybe more than 50%, but certainly not a sure thing that we'll end up getting one more rate hike this year. More and more likely that that'll get delayed, and the market will like that. It's Wednesday. Great day for markets across the board, at least here in the U.S., and up 2.5% on the S&P, on the Dow, Nasdaq almost 3. Same thing for the Russell, just really good. And again, we can pinpoint a reason. Most of the gain came after Fed Chairman Jay Powell gave his speech or started his speech, and we know that it came from that because we saw it. If you look at what the stocks did during the day, you can see a big spike once he started talking, and Asia and Europe did not have nearly as good a days as U.S. markets had. People are a little bit overblown as far as talking about Trump making up interest rate policy with his tweets. I didn't really hear a lot of that. What did get said was he thinks, he being Jay Powell, we're just below the neutral rate of interest. It didn't sound to me like necessarily won't get a rate hike in December, although I still think it's less likely than it was a month or two ago. But what he did signal was there might not be that many to come in 2019. We may not get many more rate hikes between now and whenever the end of this economic expansion is. He started off by saying we're pretty close to full employment and have really good price stability. He spent a lot of time talking about financial stability. He talked about how safe liquid assets for banks is at about 4 times their pre-crisis levels. He doesn't see household debt as a systemic threat, and firms with high leverage have increased their leverage, which was kind of one of the big negatives that he did see, and maybe a place where he might be saying, hey, there's a little bit of risk here where the corporations that have the most debt are taking on even more debt. Maybe a little bit of a concern, but he seemed to think that things were pretty balanced, and the fact that he said he thinks we're pretty close to the neutral rate means we're not that likely to get a bunch more rate hikes over the next 18 months. So the market like that, market should like that. He did take a pot shot at Trump in there. There's a pretty clear sentence where he talks about how the stock market is not the economy, and definitely he was referring to the fact that he is not going to be directing policy based on what the stock market is doing, especially if it's normal moves like we've been seeing 1,000 points this way or that way. That's not going to change what they do. It's Thursday, and markets are down just a smidge. All the headlines said down on trade talks. When markets move less than 0.25%, there's no reason for it. So who knows what it was, but a little bit lower than where we started today. The big news, and everyone I think had been expecting this to happen, except maybe Floyd and DJ Khaled, they are charged by the SEC for promoting ICOs, and they did not disclose that they were uh, being paid to promote the ICOs. And the SEC warned people ICOs might get treated as securities, and if they do, you got to follow all the disclosure laws. They did not. They're going to have to end up paying probably hundreds of thousands of dollars of penalties for this. So pretty interesting. I think everyone was expecting this a little bit last year, and that's what people were talking about. But the price of Bitcoin just kept going up. ICOs kept coming out, and nobody cared at the time. They probably paid a little bit more attention the next time someone asked them to promote anything to do with crypto. That's all for today. It's Friday, and end the week on a pretty good note. Some optimism around trade talks and a nice little update. Not quite a percent, but pretty nice, pretty much across the board. As you could probably tell, it was a wild week for the markets. We ended up getting back everything we lost and a little bit more last week. Good returns all around. S&P 500 up over 4.5%. The Nasdaq over 5%. International markets were up, emerging and developed. Treasury continued to go down a little bit. A lot of that driven by a little bit of the Fed talk that we heard that you got a good update of on the Wednesday recap. All in all, good week. We'll see what happens with the G20 trade talks. That might be the big story next week, or we might not get anything. There might not be any news out of that. Moving over to the economy, another week of mixed indicators. Generally good, though. Generally a little bit stronger than we've seen in the last few weeks. House prices up 5.5% year over year. It's pretty high. It's much higher than inflation, but down from the previous pace. Houses have been doing really, really well. GDP for Q3, first revision came in at a 3.5% pace. That's high. It's way above where the trend had been. So it's a good GDP number. Makes it more likely that we will get that rate increase in December. New home sales were down, but still pretty strong number. Jobless claims were up, but still pretty low. Personal income and consumer spending both came in pretty decently over their forecasts. Those are both good numbers to see. Looks pretty strong. And then inflation, a PCE, which is what the Fed is actually targeting, was bang on 2% year over year, which is exactly what they're going for. So seeing that not tick up, a little bit of a counterweight maybe means they don't need to raise rates as fast. Maybe means if they raise them in December, we might not see another one in 2019 for a while. Last but not least, Magnus Carlsen retains his title as world champion of the chess world. It went to tiebreakers, and so they ended up playing 4 faster games in one day, and he won the first 3, which means they didn't have to play the 4th. Won it in pretty resounding fashion, so he is still the champ 4 times in a row now. Thanks for tuning in to Fed Watching.